Hello, welcome to another episode of Money Ministry. I'm your host, Craig Mack, and today what I'm going to do is I'm going to go over how to put everything together as far as the technical analysis that we've been going through the last couple of episodes, how to utilize that. The market has changed given the ceasefire. Um, Regarding the strait over there in Iran. And so I thought this would be a great time for me to show you how to put all of those tools, those technical and indicator tools that I've been going over for the last few segments, how to put them all together and how to utilize them to make investment decisions. I think this is a great time to buy. And so what I'm going to do is to show you how to use all of that information. And then I'm going to give you some stocks that I think you should consider. And this is a good time for me to mention I am not a financial advisor. This information is to be used for educational purposes only. I highly encourage you to do your own research. And I'm going to show you how to do your research using your platform so that you can make investment decisions. But if this is your first time joining the channel, welcome. My name is Craig Mack, and I'm going to establish my credibility with you first, and then we'll get into the technical analysis and how to utilize them. Okay? All right, so first, what I'm going to do is to pull up uh, my portfolio performance. And you can see here, as of year to date, I have a return of 16.83%, which is better than both the NASDAQ and the S&P combined. Okay. I've got growth of 3,400 roughly since January, and that is for the year to date total. Over the last 3 months, I have a 12% return on my money. Again, I'm doing better than both the NASDAQ and S&P combined. I've got 12%. All right. And then for the year, for a 12-month period, I've got 106% return since April of last year. And my account has gone up by $15,874. And again, the 106% return is better than the S&P and the NASDAQ combined. And then since 2023, I've got 199% return, again, better than the NASDAQ, with a 56% return on average each year since 2023. And again, that is better than both the NASDAQ and and the S&P combined. So that is how I perform using the methodology that I'm showing you and sharing with you that I don't charge. There's no free this is all free information. I'm not charging for any special classes, one-on-one subscriptions to anything. I think that when people are trying to go paycheck to paycheck and are trying to get ahead, that it's just not fair, would not be fair for me to try to charge you information like that. I'm giving this away freely because I'm out here trying to help people get things turned around for themselves financially. Okay, I follow a pay yourself first philosophy when it comes to investing. I have a book that's coming out. It'll come out in the next couple of weeks. It'll be at an affordable price. Matter of fact, if you follow the strategy of the book, it will literally pay for itself. That's how sure I am of it. So, what I also do is I also share my performance for the month, and I share this with you guys so that you can see. For this month, I am at blow this up a little bit for you so you can see. Okay, I've only had one losing day so far this week. That was on the 16th, where I had a loss of $125.26. But so far, since the 1st of April, I have had green days each and every day. I'm up 3,100 so far this month, as compared to last month, where I had a loss of 933. But I've more than made up more than made up for what happened. Sorry about that. More than made up for what happened in March. I didn't sell, and that is a learning opportunity, a learning point I want to make with you guys is that when the market is going down like that, you got to block out the noise, block out the noise. Don't panic sell. No one has ever, nothing good has ever come out of selling in a panic, okay? So I stuck with my portfolio. I stuck with what I believed in as far as the selections that I made, and I'm being rewarded for my patience. Now, I don't share my portfolio because I'm here to teach you how to fish and to seek out your own stocks and to do your own homework and not just to copy and follow me. You're not going to learn that way. You have to go out here and put the work in and find out, make your own stock selections. That's how you learn. That is how you then, hopefully, what I'm hoping that you will do is then teach your children how to do it. And that is when you create generational wealth. If you show your kids how to do this, you can position your family to have generational wealth going forward. Okay. But it starts with you. You pass down that information to your kids, and it goes on from there. Okay. So with that, let's get into it. Get to the S&P. Why my mouse is acting up on me today right now. It's picking the wrong time. Okay, let's get to the S&P. Let's go to the 10-year. Because what I want to show you on the 10-year is, if you remember when we're looking at the MACD, okay? MACD is here, all right? And you see how it touched the zero line, but now it's curling upward, all right? See that? All right. If you go back to the last time that happened, that was October 30th of 2023, when it went down and then crossed. But I want you to pay attention to what happened when it did that. It went on this bull run. See that? It went on a bull run. Pull it up. So from August 30th, roughly, okay, all the way until you had your cross here, December 16th, 2024, you had a bull run. Okay. Now look where we are right now. It's touching and it's about to go up and cross, and especially now if the war, so-called war, is coming to an end. History more than likely is going to repeat itself, and we're going to go on a bull run. That is why I'm saying that you need to get in now. This is the time to buy. The floor has been put in on the S&P, and now it is on the road to recovery. So this is when you need to get in to take advantage and make the most gains from the stocks that you are in. Now, let's let's compare that to um, what sector we should go in. I did a comparison. I did this last year, but I did a comparison from 2025 and I projected out to 2030. What are the best sectors to invest in? Okay. And so, one of the best sectors to invest in, the S&P is basically made up of these four sectors. These have the most weight in the S&P. Technology has 31%, financials have 14.3, and then you have consumer discretionary has 10.6, and communication services has 9.6. Okay. But as you can see, by performance, technology had the best performance out of the different sectors. You also have real estate, utilities, healthcare, okay, energy, consumer discretion. But out of those sectors, technology had the largest gain. All right. And it's been that way for a long time. Now, the estimate through 2030 is that technology will lead again. 18% estimated earnings per share growth, which will outpace the broader market. And if you think about it, with the continued development of AI, that makes a lot of sense why, with the build out of the data centers, chips, the evolution of the chips, that business is still going. And so technology will once again lead the way. So now let's do a comparison of the S&P, okay, and the technology sector. So we're going to do a comparison. Well, before we do that, let's change this to a line. Again, we're looking at the 10-year chart of the S&P. And let's do it by sector. And I'm going to put in XLK. Okay. This amber line represents the SLK versus the S&P. Okay. And as you can see, roughly since 2020, this is how the SLK has performed versus the S&P. You've had a 300% return on the S&P since 2020. I'm sorry, on the XLK since 2020. The S&P has a return of 145. Which would you rather have? 300% return or 145? Either way, you're doing better than what you're getting in a savings account, right? But I'd rather have the 300% return as opposed to the 145. Okay? So what stocks should we get into? Well, before we do that, what I want to do is show you the XLK. Okay, the XLK is the technology sector. And we're going to use our charts to see where it stands, our technical indicators. Okay. I apologize for my mouse acting up, trying to work with it here. All right, this is the 1-year chart, but we want to look at the 10-year chart. The reason why we look at the 10-year chart because it's comprised of more data points, more data information over a longer period of time than just the 1 year. It's less volatile. Okay, so just like with the S&P chart, see your MACD is just now crossing the signal line. It touched the 0 line, but now it's about to cross its signal line. All right, so let's go back in history and see what happened the last time the setup was like this. And if you go here, you see as of May 4th of 2020 was the last time that it touched the 0 line, and came and bounced off the 0 line and crossed the signal line. And look what happened. You had this bull run in technology, and that lasted roughly until January 10th, 2022. What is that? 2 years almost? A little less than 2 years. Okay. We are at the same setup right now. Same setup right now. MACD is about to cross the signal line. The stochastic is not in overbought territory, but it's climbing. You have your accumulation distribution line. This is your institutional buyers. They're starting to buy into technology again. Okay. You have your relative strength line also in an incline. So all signs are pointing to a tremendous growth opportunity in the technological space. Okay. So what are some of the tech stocks that we can take a look at? Now, Taiwan Semi just reported their earnings. And one of the things that they stated was that the bottleneck, the emerging bottleneck that's happening in the semiconductor space is packaging. Okay. So just as a side note, I watched some content from a very popular financial advisor, influencer, and they were recommending some stocks. They had a guest on there that was recommending stocks for people to invest in. And they also went on to explain that how, a majority of the people in this country right now can't afford to handle a $1,000 emergency that comes up. But yet they were suggesting or recommending stocks that were costing no less than $300. And I just found that to be just totally ridiculous. Why would you recommend stocks at $300 for people who can't handle a $1,000 emergency right now? So, with that in mind, I'm hopefully going to try to fix that. All right. So, one of the stocks that you can look at is Amcor, stock ticker symbol AMKR. All right. This is a packaging company for semiconductors. Semiconductors require a special packaging so they don't get contaminated. They can't afford to have any kind of static to hit that component. Otherwise, it will contaminate the component. So this particular stock is trading at $67 uh, a share. Okay. And if you go down to their financials, first, here they've had earnings beat for the last 4 quarters. They beat their earnings, that's what you want to see. They had a 5% profit margin. Okay. The balance sheet, current assets, they've increased since 2024. And they had 38.85 in 2025. So they're trending upward with their financials. Same thing with their income. They're trending upward. Okay. Cash flow, they're trending upward from operations. Net cash has gone upward. So this is a stock this is a stock product and service because they also offer a testing service to go along with their packaging. So this is a stock that you want to take advantage of. And this is an affordable stock. If you see the chart here, this is the 1-year chart. I'm going to pull up the 10-year chart so you can look at that. And as you can see, it's climbed there. Now, when you have kicker candles like this, that means that institutional buyers, the big investment houses, are starting to buy into the stock. That's what you want to see. It's not overbought yet. It's climbing up there, and there's a good chance that it will stay up there based on the demand for their product. So this is a kind of stock that you want to take advantage of and ride and get on the wave and ride it up. $67, not $300, $67. Okay? $67. All right. Now, if you want to, you could also buy that index, that XLK. Okay. The XLK index is $154 right now. So you could buy the XLK, and when you buy the XLK, you will get a piece of each of these companies: NVIDIA, Apple, Microsoft, Broadcom, Micron, AMD, Lam Research, as you can see here. These are all very good, very stable companies. Palantir. You could, by buying just that one share, you would own a fractional share of each of these if you wanted to buy the whole basket as opposed to just buying one stock. Okay, that's another option for you. Okay, I'll show the chart, and I've showed you why you want to be in technology. This is the 1-year chart. But as I showed you previously, the 10-year chart, you want to take a look at the long view. And as you can see, it is not overbought yet. It's climbing up. And again, the last time had this setup, it went on almost a 2-year run. So that is what you want to take advantage of, and you want to jump into it. Okay? All right. So now, what's another one that we can get into? Remax. This is an EFT. Okay, this is an EFT. It's currently trading at $102.49. Why this one? Well, this is rare earth. This is a rare earth mineral exchange traded fund. Okay, and this particular fund uh, specializes in companies that are into rare earth minerals. Okay. Rare earth metals are what your semiconductors are made of, is what your EV engines and materials that go into EVs is made of. It is what your defense uh, equipment, radar, missiles, that stuff is made out of rare earth metals. Okay. So all those bombs that went off, they fired it off at each other and all that, that supply has to be replaced. Okay. And the number one, the country that owns the monopoly on your rare earth minerals is China. And this particular um, EFT, ETF rather, exchange traded fund, this particular one, this is not the right fund. Sorry, hold on. Here we go. Okay, this particular fund, all of these companies, stuff the MP materials, these companies are Chinese rare earth metals companies. They process the rare earth metals and they turn it into materials and metals. Okay. As you can see here, it has a 126% return over the past year. 126. Since its inception back in 2010 is -3. But over the past year, 126. This is one that you want to get into. It's an EFT. You'll have exposure to the global rare earth metals market, specifically China. Okay? All right. Now, the next one that I want to show you is this one, photonics. Photonics makes the component that goes into the semiconductors. And what it is replacing is copper inside of semiconductors. Why? Because the power that is needed for the AI chips, these high performing chips, um, the power uh, that is needed, copper is no longer sustainable by using copper in those chips. So they have to go to um, light to transfer that information and also to transfer the energy. They're going to be using light, okay? Fiber optics, so to speak. And that's where photonics comes into play. They're going to replace the copper in the chips going forward. They will be replaced by the materials that can transfer and use light to transfer energy and the data. Okay. So Photronics is trading at $48.53. Again, this is an affordable stock price for a company that's on the move. I'll show you the chart. These are the kind of companies that you want to get into. Now, as you can see, institutional buyers are starting to buy it. Okay. I can pull up the 10-year chart. This is a 1-year chart. We need to look at the 10-year chart. This is the 10-year chart. And you can see how it's climbing. This is a stock that you want to get into now. It's just hitting the overbought, but it's still got room to run. Okay. Again, these are affordable stocks. These are not $300 stocks. These are stocks that you should, if you've been following the methodology of paying yourself first, where you're putting $25 to $50 into your brokerage account, you should be in position to buy this stock. Okay. Very easy. All right. Let's get one more, and that'll be the last one. Next stock I want to bring up for you is to consider is called Alloy. Okay. Now, as I explained to you before, China owns the market when it comes to processing rare earth metals and materials to turn them into metals. Okay. There is only one company outside of China that has the ability to do that. And that company is located right here in the United States in the state of Ohio, and that is Relloys. Okay. They're the only company outside of China that can process rare earth metals and rare earth materials and turn into metals. Okay. Now, this stock is trading currently $11.44. $11.44. This is a company that is considered to be a prospect. Okay. So you be careful with this one. But I think in the long term, this is a stock that you can get in right now that will pay you uh, huge amounts of gains down the line. Okay. But it's affordable right now. $11.44. Okay. So there you have it, folks. These are the recommendations that I have for you for this particular segment. I've gone over how to use the uh, indicators so that you can take advantage of the opportunity that the market is currently presenting right now. And I'll pull up the S&P 10-year chart again. And so this is the time that you want to get into the market and take advantage of what is developing to be another bull run in the stock market, and so that you don't miss out on the opportunity. Okay. Um, with that, I'm going to let you go, and I will see you again on the next video. Take care.